Welcome to Nexth Press News, your daily window into innovation, business, and AI-powered disruption. Today, a powerful mix of headlines shaping our world, from deep space mysteries to deep market tremors. From the stars to the markets, this week is electrifying. Harvard's Avi Loeb warns 3I/Atlas may be alien tech, not a comet, while U.S. tech stocks tumble, sending ripples through Asia and Europe and shaking AI-fueled optimism. Governments and industries are acting fast. Denmark bans social media for under 15s, Japan pilots yen-backed stablecoins, Alibaba surges over Meituan in a fierce delivery war, and Airbnb and Expedia soar as travel demand keeps climbing. The world is moving fast, and the story is just beginning. A Harvard scientist is reigniting debate over possible alien technology. Astrophysicist Avi Loeb says the interstellar object known as 3I/Atlas may not be a comet at all, but an advanced extraterrestrial probe. As the Manhattan-sized object heads toward its closest pass to Earth on December 19th, NASA has launched an unprecedented observation campaign, though high-resolution images remain unavailable due to the U.S. government shutdown. Loeb, who leads Harvard's Galileo project, points to 10 anomalies that defy normal comet behavior, including extreme light polarization, an unusual nickel-rich gas plume, and a trajectory just 9 degrees from the legendary 1977 WOW signal. Perhaps most mysterious, NASA detected non-gravitational acceleration as the object rounded the sun. Movement, Loeb says, could signal a form of propulsion rather than evaporation. As he told Newsweek, if it's not a natural comet, we may be witnessing technology from another civilization. Global markets are under pressure as a tech-driven sell-off in the US ripples across Asia and Europe. On Friday, investors hit the brakes on months of AI-fueled optimism, wiping out recent gains and reigniting fears that valuations may have climbed too far, too fast. Japan's Nikkei 225 dropped more than 1%, its sharpest weekly fall since April. With semiconductor and AI-linked stocks leading the slide, the downturn spread through Hong Kong, Seoul, and Shanghai, where weak export data added to the gloom. In Europe, the mood was no better. The FTSE 100, DAX, and CAC 40 all opened lower, echoing Wall Street's retreat. The stock 600 slipped nearly 0.5%, while property group Rightmove plunged after issuing profit warnings tied to AI investments. Analysts say the pullback highlights growing tension between AI-driven optimism and real-world earnings pressure. A reminder that even in the age of artificial intelligence, markets remain deeply human. Denmark is taking a bold step to protect its youngest citizens online, announcing a nationwide ban on social media for children under 15. The move, unveiled Friday, makes Denmark one of the first European nations to impose such sweeping digital age restrictions. The policy, backed by the government, conservatives, and the radical left, allows limited exceptions. 13 and 14-year-olds may gain access only with parental consent and a formal assessment. Prime Minister Mette Frederiksen says the measure is about protecting childhood itself, warning that social platforms are stealing our children's childhood. The announcement comes as Australia prepares to roll out a similar ban next month, targeting users under 16 and threatening platforms like TikTok, Instagram, and YouTube with multi-million-dollar fines for non-compliance. Denmark's digitalization minister Caroline Stage called it a line in the sand, saying tech platforms have had free rein in children's rooms for far too long. Officials cite growing evidence that social media disrupts sleep, attention, and mental health, especially when parents aren't present. Bitcoin slips below the $100,000 mark after a short-lived rebound. The world's largest cryptocurrency is now hovering near $100,200, pressured by continued selling from U.S. institutional investors. Analysts point to the Coinbase Premium Gap, a key indicator that tracks Bitcoin's price difference between Coinbase and Binance, which has turned negative again, signaling that American institutions, including major spot ETF holders, are offloading more than buying. According to crypto quant analyst Martun, the market's reaction fits a familiar pattern. When the Coinbase premium dips, Bitcoin often follows. It's another reminder that U.S. investors remain one of the strongest forces shaping crypto momentum in 2025. In Japan, a major step toward digital finance transformation, the nation's top 3 banks are teaming up under regulatory support to launch a stablecoin pilot program. The Financial Services Agency has officially endorsed the initiative, part of its new payment innovation project aimed at modernizing Japan's corporate payment systems. Banking giants, MUFG, Sumitomo Mitsui, and Mizuho will begin testing yen-backed stablecoins this month, exploring their use as secure electronic payment instruments. The FSA says it will guide the process, offering legal clarity and aligning Japan's efforts with global fintech trends, signaling a powerful move toward a more digital and connected financial future. In China's tech battlefield, one bold market play is stealing the spotlight. A paired trading strategy, long on Alibaba, short on Meituan, has delivered a stunning 130% return this year, according to Bloomberg. Alibaba's stock has nearly doubled in 2025, fueled by artificial intelligence momentum and renewed investor confidence. Meanwhile, Meituan is down roughly 33%, battered by a relentless food delivery price war that shows no sign of cooling. The rivalry escalated last April when Alibaba expanded aggressively into food delivery, taking direct aim at Meituan's market dominance. Despite government calls to rein in disorderly competition, the battle rages on, with Alibaba's deeper pockets giving it a decisive edge. It's full throttle for the travel sector. Airbnb and Expedia just posted powerful third-quarter earnings, proving that travelers aren't slowing down anytime soon. Airbnb shares climbed more than 5% in after-hours trading after the company reported $4.1 billion in Q3 revenue, slightly topping analyst forecasts. Expedia soared nearly 18%, beating expectations with $4.41 billion in revenue and raising its full-year outlook. Both companies credit strong domestic travel demand, as Americans keep booking trips despite economic worries. Airbnb logged 133.6 million stays, up 9% year-over-year, and a record $2.1 billion in adjusted EBITDA. Expedia, meanwhile, saw gross bookings rise 12% to $30.7 billion, marking its fastest U.S. growth in over 3 years. The message is clear. Travel isn't just back, it's booming. From the far reaches of space to the pulse of global markets, this week reminds us that the world is moving fast and unpredictably. Loeb's warning on 3i/Atlas sparks curiosity and awe, challenging how we see the cosmos. On Earth, tech sell-offs show that even in an AI-driven era, markets remain sensitive to reality and caution. Denmark's social media ban underscores the importance of protecting our youngest citizens in a digital age, while Japan's stablecoin pilot signals a bold leap toward the future of finance. Meanwhile, Alibaba and Meituan's battle highlights the high-stakes power of strategy and AI in corporate rivalry. And Airbnb and Expedia prove that consumer confidence and travel demand continue to defy economic headwinds. Across science, markets, and society, the pace of change keeps accelerating, and the stories are far from over. And that's a wrap for today's edition of Nexth Press News, where innovation meets intelligence. I'm Vivi, and it's been a pleasure guiding you through the latest stories shaping AI, business, and the world around us. Stay connected, stay curious, and keep following the Nexth Press interactive newsfeed.